Very warm welcome to this morning's Better Business Breakfast. And we've got a really interesting morning ahead. Our subject matter is reaping the rewards of thorough risk management planning. And when it comes to the complex business of agriculture and farming, I don't have to tell you that there are multiple and complex risks. And so today we're going to be unpacking major losses and claims and case studies to really better understand how thorough risk planning and that approach to insurance can increase sustainability and resilience for farmers. So now, without further delay, I'd like to introduce our first speaker, Karen Fredericks.
It is a thriving industry, agri. As much as I've showed you the figures are reducing, it can never completely reduce. So there's a lot of real underwriting that needs to be done out there. But also when we quote the premiums, I think just accept them, you know. We know that there's a lot of sort of farm murders happening, horrible things happening in the agri industry. There's fencing being stolen, etc., etc. So a lot of the farmers have had enough. So what they do is they almost hire like small armies to protect themselves. But that brings another risk, because who are these people? Are they trained? Are they, you know, you can't just take someone that yesterday was picking apples, give him a gun and say, watch the farm. So these, I've just listed some of the questions in terms of what you should consider. Are these professionals? Have they been trained? Is he offering this as a service somewhere else? Don't wait for the claim to happen and then start telling your underwriter about it, because it's ugly. Find out up front what's going on, talk to your underwriter, make sure that that note is taken, and if necessary an additional premium is paid. Then one of the hot topics as well is drones. I'm sure you've been seeing that everywhere. I do believe it's a huge help for farmers. They can check their fire breaks, count their cattle, do whatever, just by using this little thing. They can sit on the patio and basically move it around and know exactly what's happening on their farm. But for us as liability underwriters, it brings a problem. I mean, I don't know at the moment if these crash and hit a rock, let's say, would that cause a spark and start a veld fire, you know? And if there's people hiking on the farm, what if it smashes into one of them because the farmer has lost control? So these are issues where I don't have all the answers. I mean, underwriters will look at something like this, think it through, come up with the wording, etc. So it's not that the risks aren't uninsurable, but if you have not told your underwriter, you may have a problem when there is a claim. Always know what your farmer is involved in. Don't just say he's a farmer, you know. Tell your underwriter what is it that he's doing. And for yourself, when you have those discussions, know what he's selling, know what he's producing, who is he selling to. Think about the liabilities, because your farmer, you'll sit there and tell me he's never had a claim in 10 years, he's fine. But the day that claim happens, I think liability can be one of the most unpleasant claims ever to deal with, because it's always like, whose fault is it? Your farmer wants to help the third party, we're telling him no, you can't admit liability, etc. So it's you know, and often it's to do with injured people. You don't really want to refuse a claim where a child's been hurt or someone's eaten something that you sold.
Next we have Luke Redebe, who's Deputy Director of Veld Fires Oversight at the Department of Agriculture, Forestry and Fisheries. And he's going to share some more technical insights on the Act and how to think about risk from that perspective.
More so that most of your clients and the farmers use fire as a management tool. But in the process, accidents do happen. What are some of the legal considerations that needs to be taken into consideration? And what could be done to ensure that we prevent certain disasters from happening? 75 million to 850 million fires throughout the world almost every year. But very interesting, if you look at the large percentage of those fires are actually taking place in our own continent, and in particular the southern part of Africa. So people tend to underestimate the impacts of the fires, probably because a person has not gone through that experience or has not seen someone who has gone through that situation. I think it's the previous speaker has just shared with us some of the losses that are incurred by different farmers and landowners. Those are huge and huge figures. From time to time, they come and they claim. But people who normally are the causes of the fires and the damage are the people who tend to underestimate the impact that these fires are actually causing, to the business of people who have invested on the land. I think you agree that there is a risk. There is a fire risk and a serious risk that needs to be taken into consideration. So it means, and it goes without saying, the risk needs to be managed and managed properly. In agriculture, forestry, sugarcane, field crop, you name it. This is the risk that you must take into consideration and ensure that you manage and manage it properly. But we say, if you are a member of the Fire Protection Association, you show an element of responsibility, we show that you care, and therefore it is worth it to be covered by any insurance. If you are not a member of the Fire Protection Association, we must ask, how do you manage the risk that we have spoken about as an island? You can't. Because you need certain resources, you need certain institutional support, you need certain knowledge in order to manage that risk. Any person who lights or who uses or maintains a fire in open air in contravention with section 10(2) is guilty of the first category offense, which means if you are in a court of law and then you are faced with the magistrate, then you can either be a fine if you are a first offender, if you are a second-time offender, imprisonment up to 2 years. We must expect increased fires are predicted as temperatures rise in the southern Africa, which means we must brace ourselves for a very hard period lying ahead in terms of the fire risk in the country.
We mustn't confuse the gross profit with the insurable gross profit, and that's where many of the brokers get it wrong in the market. So get to know the difference between the two, because if you don't, the brokers who do know how it's going to work will take your client. If you have a factory fire and the pack house has burned down, suddenly you have loss of market. So he has to renegotiate with his buyers and exporters to re-establish his market share. But a critical component that we always recommend for any agribusiness is your additional increased cost of working. So that you, even if you bring a small component into your sums insured and your policy, critical that you bring that in. So it takes into account many factors that we often oversee. Critically important that if you're going to get into that market, it's a highly specialized market. You need to understand the complexities of insuring a farm and a crop. So if you want to get to understand it, you need to speak to the underwriters, the marketing, and go for the training. Very important that you do that. If you don't do the compliance training, they won't allow you to write the business. It's going to have major repercussions for all of us in the industry, where we as intermediaries let insurers do the work on our behalf if we are not experts in the field. So if you want to dabble in crop insurance, get to understand the subject matter very, very clearly. Otherwise it becomes highly, highly risky for you as an intermediary. The problem often comes in where the products are sold incorrectly to the producer. Full disclosures aren't made to farmers on the various complexities and how these sums insured and calculations are made, and that's where the normal arbitrations and queries come in. So if you are selling a crop policy to a farmer, know the product wording very well. That's all I can say.
Some of the risks we talked about, particularly spread of fire, is not just an agri risk. How does a broker approach, well, in your case Santam, to get on a 631 type policy, commercial policy, that kind of risk, which is typically an agri-risk?
When we talk about spread of fire, often people will come to us and say, this is happening, where do we buy spread of fire cover? Now you'll find on most of your commercial type policies there is no exclusion. That's what makes liability sometimes quite easy. Look at your defined events, then look at your exclusions. And if there's an exclusion for animals, for adventure something, for spread of fire, then by all means, start worrying. The rest of the time I would just say, disclose it. Give your underwriter a chance, to assess the risk. It's only in the agri environment that you have the standard spread of fire exclusion, because the underwriter wants to know what's going on. And once you've said to him, well, this is what's going on, then usually he'll give you the cover or some cover, etc. So yeah, not every policy excludes spread of fire.
Can you just perhaps touch on the capacity levels provided by the 3 crop insurers, as well as any emerging markets coming into South Africa and Africa?
I think it's an interesting question, because last year capacity was a tremendous concern. If I can focus maybe on the horticulture side, so being the industry that we are focused in the Western Cape, horticulture is normally let's put it this way, the conventional underwriters in South Africa put a limitation on their capacity size for horticulture. Because if you take a farm, for instance, you can have one farm with 10, 20, 100 million rand, some insured, in a very small location. Whereas if you look at wheat or maize, you could have the same sum insured spread out a tremendously vast situation. So the underwriters who are in crop insurance would primarily try and focus on the broadacre maize, wheat type crops, looking more north of the X River. So that's where the majority of the book is concerned. So if you look at the current book in South Africa, current estimates are the premium volume in South Africa is probably around about 1.5 to 1.6 billion in terms of crop insurance. And in terms of the fruit industry or horticulture, I don't think it's more than 100 million. Maybe a little bit more, 120 max.
Huge thank you to our sponsors, Santam, without whom none of this would be possible. And also to John Deere and Agrico, who've supplied the heavy machinery for the day.